And regarding the third quarter expectations for real estate companies, we're joined from Dubai by Mr. Firas Al-Msaddi, real estate expert and CEO of FAM Properties. Welcome, Mr. Firas. Let's begin by reviewing the latest numbers from the real estate sector. Most analysts expect growth to continue during this period. What are the main factors supporting companies' profitability?
Currently, statistics for the first 9 months of 2025 highlight three main indicators: the number of off-plan sales transactions, the number of resale market transactions, and the number of newly launched real estate units. Between 2024 and 2025, off-plan sales increased by 20% from 96,000 to 116,000 units. The resale market grew from 48,000 to 53,000 units, which is 10% more. What's most important is the number of residential units launched, which actually went against many early 2025 expectations. In the first 9 months of 2025, around 120,000 residential units were launched compared to 130,000 in 2024. So transactions represent demand while newly launched units represent supply. That means supply fell by 7.5%, while demand rose 20% for off-plan and 10% in the resale market.
And this varied geographically as well. Some areas are seeing more demand while others are saturated with supply. How much does this difference affect companies' profitability and sales performance?
Absolutely, 100%. When you look at Dubai's real estate market overall, we're seeing three very strong indicators. However, some areas have already reached their price growth limits, while others are just beginning. One key reason for the 7.5% supply drop is the sharp increase in land prices across Dubai, on average between 200% and 300% over the last 5 years since 2020. That has made it much harder for developers, especially new ones, to buy land at today's prices and still deliver projects with healthy profitability.
Does this mean prices will continue rising? Or are we likely to see any correction in the short term?
Rents are doing very well. And honestly, I don't see any correction in the rental market so far based on the data. But it really depends on the location. For example, in Jumeirah Village, over 27,000 residential units are expected to be delivered in the coming years, and the area already has thousands of existing units. So yes, there could be some corrections there. However, Jebel Ali will see the largest number of deliveries, about 29,000 units. But today, Jebel Ali is still relatively empty. So the impact of those 29,000 units in Jebel Ali, which is one of the most in-demand areas right now, because it's still in its early stages, while other areas have already reached very high price levels, won't have the same impact as it would in Jumeirah Village. Some areas may see price corrections, but others will continue to experience growth in both rents and sale prices, depending on infrastructure development. Jebel Ali is a large area and its infrastructure is still developing. As we see more infrastructure projects and developments, prices will continue to rise there.
Compared to Dubai, what about the supply and demand situation in Abu Dhabi? Given that land availability in Dubai is limited and prices are high, could this push investors toward the capital?
That's already happening. I believe Abu Dhabi currently offers excellent investment opportunities, especially in land. According to DXB Interact, land prices in the Al Wazl area rose from 500 dirhams per square foot in 2021 to 3,500 dirhams today. Some areas in Dubai have seen land prices rise sevenfold. I'm not giving my opinion, these are statistics. So when you look at Abu Dhabi, I believe this is a historic opportunity for developers to enter the market and acquire land, because prices there are still very reasonable and there are still prime locations available for acquisition.
Let's talk about the major developers such as Emaar, Aldar, and Damac. To what extent can these companies control their costs, especially since project financing involves significant borrowing? Will lower interest rates help reduce financing costs for them?
Absolutely, 100%. But I also think we're witnessing a turning point in Dubai's real estate market for developers. Take Emaar, for example. When you allocate land to Emaar, it's very different from giving the same land to a new developer. Over the last 3 years, we've seen many new developers entering the market. For many of them, this is their first project. But when you give land to a developer like Emaar, they can create something very few other developers in Dubai can replicate. Even the Emaar brand name alone adds value to the selling price. Even if another developer builds an identical project, Emaar can still sell at a higher price, and their resale market performs better too. People have confidence in the brand, and today brand equity plays a huge role in Dubai's real estate market. We've also seen some developers over the past 3 to 4 years achieving significant growth, and they're now coming up unexpectedly on the scoreboard, like Binghatti, for instance, achieving remarkable growth and sales numbers over the past few years, something no one expected 3 or 4 years ago. So today, a developer's brand name and track record, what they've built and delivered in Dubai, make a major difference in what can be achieved with land. Land might be too expensive for some, but experienced developers with a strong name and brand equity can still create profitable projects that also benefit investors.
We've also noticed that even major developers are not limiting themselves to local projects in Dubai or Abu Dhabi. We're seeing international expansion. Emaar, Damak, and Binghatti as well have entered markets like the UK. How much does this strategy help boost foreign revenues compared to local market income?
Well, honestly, if you look at any global real estate market, whether London or elsewhere, and compare profitability and returns, there's simply no comparison to what's happening in Dubai today. However, expanding into slower markets like London is more of a strategic diversification move than a profit-driven one. It's not about entering London to increase profits, it's about long-term strategy and brand expansion. Right now, Dubai is witnessing a historic transformation even in people's mindset. Many residents who have lived here for 10 or 15 years used to say, I'll never buy property in Dubai, I'll just rent. These same people are now buying at the highest prices in Dubai's history. Why? Because Dubai has built a brand of trust and respect. The hospitality and warmth people feel here, even from an immigration officer at Dubai airport, is unlike anywhere else in the world. So today, it's not just about investment. People genuinely want to live in Dubai. Many who once planned to move back to their home countries now say no, because Dubai has a proven track record in delivering a high-quality living experience.